Good morning, good morning. Morning, Maurizio, Francois, Andreas, Philip, Arturo, Dan, Sledge, John, Michael. Good morning. Glad to have everybody. And welcome to the Morning Monster. I don't drink coffee. Don't like hot liquids, so I drink Morning Monsters. If you want to chat with me like all these fine folks I'm talking to right here, all you got to do, be a subscriber, hit the button right there where the monster can is, and it's a little green one, and be a subscriber. A few seconds later, you can start chatting, and that only works while I'm live, though. If you're tuning in after I'm no longer live, you're gonna have to leave a comment down below. Give me a thumbs up if I say anything today that you like, or maybe you don't like, that at least you find beneficial. And you know what? If you want to chat with me outside of this live, links in the description. It's like $5. You get indicator, you get a watch list every week, you get into my Discord server where you can chat with me live and get updates all day long. All right, glad to have everybody. PCE has out this morning, personal consumer expenditures. What the heck does that even mean? Well, it's, like CPI, but it's actually what people are spending. CPI commonly referred to as inflation, but I think it's all cooked. It's all cooked, regardless of what number you use. If it comes from the government, it's cooked. And I don't know. I think it's all a bunch of malarkey. Jerome Powell, our buddy Jay Powell, loves PCE. That's his favorite number, according to what he keeps blabbing about. And we'll talk about it here. But all trading involves a substantial risk of loss. I am a trader, not an investor. Past performance is not necessarily indicative of future results. I may be full of crap. Let's be honest. This presentation here, intended to be informational, educational, and fun, is not a recommendation to buy or sell any financial instrument or anything else. Don't buy stuff from gurus. Don't buy stuff. You can pretty much do everything for free if you really wanted to. If you desire personal financial advice, hire and consult a financial advisor. I'm just here to try to give you a small leg up, potentially. Scout's honor, I'm here to help you. I'm trying to. Trying to be. All right, here we are. On Thursday, we have PCE. If you've never been here before, this is forexfactory.com. Click on the calendar button right here in the middle, and all the economic news, numbers you could want worldwide thrown in your face right here. Why Forex? Well, these things tend to, money traders tend to look at worldwide news more than just U.S. news. So right here, core PCE, month over month, 0.2. We're expecting 0.2. Not really different. The year over year, I don't have the year over year on here, but it came in a little hot. I think it is, and that's why we're seeing the slightly negative reaction. So, is what it is, Interestingly, though, I pulled this in, personal consumer expenditures, right? That's buying stuff, right? It's the change in price of goods, services purchased by consumers. It differs from core CPI in that it only measures goods and services targeted towards consumed by individuals, right there. It's not targeted toward companies. It's not targeted toward the broad economy. It's not, it's toward consumed by individuals. So that's why Powell likes it. It kind of indicates how the consumer is actually doing, even though this is the consumer price index. Businesses are consumers, entities are consumers in CPI. But this is personal. This is actual end user consumption as individuals. So, yeah. Well, California's on a mission to outlaw gasoline. They're going to do whatever they can to bump the price. But this is interesting, too. Unsold EVs are piling up at car dealerships. There's some 92,000 EVs sitting, at dealerships. 92 days of supply right now. 92 days. Been hearing about the shortage in cars. Right there, brands like Jaguar, Infiniti, Lincoln have over 100 days of supply sitting on the lot. It's quite interesting, if you ask me. So this is Interest rates coming into play, I think. And no one wants them. How do you charge them? Range anxiety. They're expensive. And, interest rates. I mean, it's like they're already expensive. And then do you add more expense because of interest rates? I mean, I don't know. Ford has them on the lot. Says Chevy has them on the lot. I don't know. I went to look up a couple that I might like to possibly test drive or whatever. And funny enough, it's all the crappy ones that were in stock. All the lower end ones. There were tons of stock of lower end ones. I guess that's what they're trying to. But the lower end people are the ones that can't afford this. Like, I mean, look at this right here. This article. Poor Americans skip meals, can't afford. And I saw a funny thing. Bidenomics. I saw a funny thing. I think it was yesterday. It was Let's Go Brandonomics. That was just funny to me. But this doesn't sound super great. So definitely be careful out there. I mean, we could have this thing could turn down. Now, who remembers this chart from back in January? Anybody? This is January's chart. This is not the current chart. This is from January. It's when we were still working on a breakout. This was December pullback, October low. We were right here. January 24th. That's the date on this chart. And where are we at now? I kind of drew giant up arrows. Either we were going to pull back from the trend line or we were going to break out and retest the trend line. And right there, we broke out, retested, and been up. Now, yesterday, this is updated through yesterday. Hanging out right here. Looks like, to me, the path is going to be this path, the bullish path. I was talking about this yesterday. Maybe you got confused on time frame. This is a 3-day chart. All right, these candles are 3-day candles. This is the big time frame. This is why I'm still bullish. These numbers up here looking like right now 5,300, possibly 4,880. That'd be a new all-time high right there. Potentially pull back to 4,600, then up to 53 before we wrap this pepe up. Now, time-wise, these are not. This is not time-wise aligned here. All right, just a demonstration of levels. You can see I drew these. I haven't changed this white arrow from this chart right here. These are the same exact white arrows right there, sitting right there. You can see I was a little more aggressive on my pop. It took us a little longer to get over here, and we're still not up to that level. So time-wise, not really trying to predict it that great, but I'm thinking we're probably heading on up here. So these levels to watch out for: 48.83, probably pull back into. This is just classic. We didn't do this, this last rally from March low up through the August high or July high, whatever you want to call it. We didn't really get a pullback at all, but I kind of do expect a pullback here. If we get up to 48.80, we may come back into this 46, possibly 44, same area we are now. That'd be a pretty deep, people would get pretty bearish on that move, and that could take several months. We may not get up in here till next year. Beginning of next year, we could pull back into the summer possibly, and then we hit another rally before we wrap this puppy up. So this could correspond with Bitcoin going a little crazy too. All right, keep it in mind. It's kind of the big picture path. I'll keep it updated, keep you on the path. This is like the big picture, high level, where we might be heading. So right there. All right. Yeah, PCE excludes food and energy. I mean, we buy food and energy. That's what we all buy. So, I mean, it's probably the two biggest personal expenditures that you have, food and energy. It's kind of ridiculous to count it out. But like I said, all the numbers are cooked. Anyway, jumping over. What's moving today? Micro time frame. S&P still hanging out in the orange box. And for what? I gave you like a 2-week warning. We were probably heading to this box. Now, the decision, the big decision for the market. Do we turn down? Go down here? Do we break out? keep on going, or do we get a retrace on the breakout? That's kind of it's a coin flip zone. Like, I don't know which way it goes from here exactly. It doesn't really matter. Any way we cut it, we're probably still bullish right now based on the micro price action that has gotten us where we are right now. This was all corrective. This is looking kind of bullish and tilts my favor, odds, whatever you would call it, to looking for this path right here. May get a little dip in here and pop, and then a bigger drop, and then take off. So that's kind of I'm giving that a little more credence than just dropping out to the roadmap line at this point. We could do that. I don't know for sure which path. I mean, there's nothing guaranteed. Just kind of outlining the highest probability paths from right where we are right now. Now, if we start breaking support, if we get below this level, we're probably going to this level, get below this level, watch out below. The market can change up what it's doing. It's quite possible. I mean, it's a low probability thing right now, but it can change it up. So keep it in mind. All right. What's moving today? Everything reloads. I don't know sometimes. So S5FI still looking like we're getting the bounce. Beautiful. Probably, I mean, all indications in the past are that we're probably coming back up near the top. So this is looking pretty bullish. Now we could stall out here in the 50s and 60s and double dip. But right now, looking like we're probably still rocking it up. Rocking it up is what I said, not rocketing, rocking it up. All right. Yes, let's look at the overnight action. Pop down a time frame here. Inching out to a higher high, and then getting the PCE news and pulling back a little bit off of the highest high we've had in a few days, few weeks. Still coming in right near that orange box. That's the orange box from 2 weeks ago that I was talking about, where we had to break above and we didn't. We failed and went down. Now we're working on something coming back up through. If we can get above that, it's the first indication we're going higher. The top of that thing hanging out right around 55.60, right around 55.60 on ES. Now the ES is the S&P 500 futures. As you can see, there's a little bit of a discrepancy between the cash index and the futures. This thing rolls over here in about 2 weeks. We'll go to a December contract and the gap will get wider again. Right now, there's almost a 50-point discrepancy between the September contract that expires just in a couple weeks and the December contract. So if you don't know what I'm talking about, that would be ESZ 2023. There, this is the December contract. Right there. This is probably blowing some people's minds. ES is contracts. ESU is the one that's being reported under ES1 right now. It's a ES1 exclamation point is a constant contract instrument. It's a way to reference whatever the highest volume contract is. And ESZ is the one we'll be moving to. As you can see, 55.78 right now, 50 points higher. To me, that's indicating the market expects us to be rallying into the end of the year. Since this futures contract is significantly above the current futures contract, like significantly is 50 points. Typically we have about a 35-point discrepancy between SPX and ES. With a 50-point on the rollover here, like that is significant indication that we may be going higher into the end of the year here. And there's the market. Heard the bell on my other computer in the other room. And NQ also kind of showing some bullishness here. Finding a little resistance, getting through. We may see a retrace back to the roadmap line on the 30, possibly the hour. And that's kind of the path on both ES and NQ. NQ, of course, is QQQ. Like that's how you trade it. ES is SPY, SPX. NQ is NASDAQ, INDX, QQQ. Russell here on a little different path. On the daily chart, we've been a little more bearish. Coming up, we're still below the resistance up here. Still got a ways to go to get bullish. This one may be more bearish, actually, and may turn down again. So right up there's the resistance, right around that 1950 area I've been talking about. We got to clear above that to indicate that we're going higher. If we don't, this one can dip right on down. Oil, hitting my alerts this morning. Time to get long. If you believe in my pattern, this is the conservative entry, which I'm probably going to take with a leveraged instrument, which leverage is dangerous. Be careful. My weapon of choice, UCO, potential to blast on up higher, about up in this 40 area, right up in here. Looking at that, just the minor pullback here, probably only 33, 35, but has potential to pop on up to 40 based on the bigger picture pattern. Get myself tongue-tied. USO, another popular way to play. Only kind of expect that one to get up to 80 though. So the opportunity cost is something for a trader. Opportunity cost, 31, 32. We're looking at 31.50 for a move up to 40 potentially. Even if we just got to 33, that's like a 8 to 10% move. 40 is like a 30% move. Whereas USO, we go from 75 to 80. I mean, it's only $5 on 75. What? Like 12% move, maybe 10%, less than 10%. So just be careful. Yeah, that's why opportunity cost. Anyway, gold may get like. I want to see this rip right on through this zone here. This three-wave up and lack of continuation so far making me nervous that we may see this bigger dip. Be careful, definitely on gold. Silver, kind of not great with that. This right here was not great. I don't like that. It came up lower high and rejected and getting a little red candle today. We got to get above this right here. Got to get above this. That again may indicate we're going back down again. Don't like that right there. Not my favorite. So I do keep an eye on this stuff. BTC, come on. We're retesting the roadmap line still. We got to break above this high right here. Got to get above this guy. Got to get above that to get continuation. We break down below the roadmap line, probably going lower on Bitcoin. Ethereum, not showing the bullish price action yet. Still hanging out below the roadmap line. Still bearish at this point. Bitcoin's at least consolidating on top. This is the futures, not the actual spot market. But positive so far. We need continuation. Dollar. Back to the roadmap line. Bounce. If we go back up and bust through this orange, probably going on up to retest that 618 level of the entire drop. There's our next targets up, 104, 105. Could potentially put us on a path on up here to retest that 618 zone of the entire drop off of this September high down to this July low. That's the micro moves. This is the bigger macro move potential. But if we turn back down, get below support, probably heading down to 96, mid 90s area down there. All right, stuff moving today. CRM, nice big pop. Is it enough to get the market moving? That's if that candle turns green, that's a conservative entry. Looking for 249, 262, and this gap fill box should be a gap fill box. No, just consolidation to the ties. That's going to be a big resistance. That's why we turned down here. So big resistance box where we topped out before all-time high. That'll be resistance all the way up to 300. DG, Oh man, right down. It's got to hold. It's got to hold this box, or put it all the way to the low there. It's got to hold that box. If it cannot hold that box, watch out below. We could take back. We could take it back to here. That would be a big ouch on Dollar General after being up here almost to 300. Yikes. It's your personal consumer expenditures there. And Dollar General sells a lot more crap than just food. But missed on the top, missed on the bottom, lower guidance on $9 billion. I mean, 31% margin, price to sales, less than 1. I mean, people are just not expecting them to outperform. Anyway. OKTA, nice little pop, still in the consolidation. Just not, I don't even expect it to go anywhere until it gets out of that crap. That is the gap fill box. We've been up to the top, we've been back to the bottom. Just doing nothing. I mean, it's kind of like meta gap filled right there. Kind of expect it to go back to the bottom. ASO, Academy Sports, nice pop back above the roadmap line, but that's still kind of a corrective path that may result in an extension lower. ANET. Yeah, beautiful. Right up to the target, 196. Watch out for a retrace after we get there. ICCT is a choppy hot mess of bullcrap. Nothing to talk about. There's no pattern here. MDB. Yeah, it looks like it wants to reach the roadmap line. Could break out and go on an extension. It does have significant resistance right there at 464. And then the all-time high, or all-time high? Yeah, all-time high up here at 581. That's like a 120-point difference. So that could move. Shop, nice pop. This may be another roadmap bounce. I've already got it drawn on there. Oop. There we go. Conservative entry when we get above that line there at 67.50. Looking for 60 or 76, possibly 81 on the upside. CIEN. Nice pop, but it's still just in the consolidation. Gnarly. Higher low, lower high. Nothing. There's just no pattern setup. VFS probably going to come back to Earth. Now, you could short the crap out of that one if you could afford the puts. That's probably coming back at least to 15, if not. You know, it's going to at least lose 50% from here. It's going to be a heartbreaker for some people. UGI. Just horrible. That's a horrible chart pattern. Nasty. Ollies. There's a dollar store. Well, not necessarily dollar store. I count this in the dollar store, but that one's banging. You know, retail is a story of haves and have-nots. They are performing. They have it together. Beating on the top, beating on the bottom, setting reasonable expectations. Probably gonna break out like that. Next move, let's see, potentially up to around 86, possibly 103. Move right up in there. Yeah, a little baby move, little baby correction, bigger correction. Yeah, hitting the resistance from that move could extend right up into the target. All right. Shop went with an aggressive up 110%. Nice pledge, nice. Synthetic is when you buy a call, sell a put to finance it, and then usually, you know, a prudent trader will buy a protective put to limit your risk. But straight up, if you Google Investopedia synthetic, you buy a call and sell a put, and the risk reward graph looks exactly like buying stock. So there we go. Yeah, that was spot. Yeah, I'm on spot too. I own the spot. That has the same kind of pattern, potentially bouncing. Conservative entry above 165, looking for 194, 210 up there. So I think I bought a 160, sold a 160, and bought a 140. I think maybe a 150. Put below it out next year, I think. This was a Turnmeyer Trading Lab trade. So spilling the beans a little bit. If you want to join the VIP all access group, you got to call in. Like 855-454-0816 and ask for the Turnmeyer Trading Lab, and you get all the access to stuff, all my experimental stuff. I do have experimental stuff. There's an experimental trade I'm working on. So far, 100% winner, just like green light income alerts. So, all right. F5 below, just chopping sideways. Not awesome. DLTR. Oh my goodness. That's the watermelon seed squeeze. That thing's probably. You want to see the target? This is going to be gnarly. Watermelon seed squeeze target. Oop, moving the wrong thing. Be right down there. Technically, it goes from right there, but we'll go with right there. Yeah, so another 20 points to go. May stop at the gap fill, but the watermelon seed squeeze target right down there, 105. That's classic right there. Bounce, 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 bounce. Fake breakout. Hit resistance again. Breakout, retest, and drop. If I was a short trader, that would have been beautiful. Beautiful, beautiful. I don't like going short. I just don't like the optimistic. I mean, think about it. The long-term view of the market it's going to accumulate 8% a year. I take short-term opportunities for the downside, but long-term, I'm kind of bullish because that's the long-term history of the stock market is up. So don't be negative. I mean, short-term, you can be negative, but long-term, you should kind of be biased positive. I mean, the facts of the matter are the market usually goes up 8% a year on average. So Baidu just continues to chop in this bullcrap. It's just stuck in between this resistance zone and this support zone, just stuck. I mean, it just keeps doing that. Little diversion down, tried to break up, and just not doing crap. I mean, gnarly chart. Keeps making the morning movers, but gnarly chart. LE lands in. Retail haves and have-nots. That one's have not. Missed on losing money. Missed on the top. Missed on the bottom. Ouch. Gross profit, but they lost money. Ouch. Lands in can go out of business. They can all go out of business. Sears went out of business. Kmart went out of business. JCPenney's is practically out of business. Bed Bath & Beyond out of business. I mean, watch out. Chewy, man, probably coming down here. I mean, a lot of business, but losing money. I don't know. Price to sales 1.2. Not super awesome. If it breaks below that low from right back here, probably coming down to 14. That was corrective. Probably wants to get the extension down here. All right, that's it. That was the morning movers. Bias for the day, cautiously bullish for all the reasons I outlined here. Maybe on this path. See if it works out. There you go. We can still If we get above this box, it definitely flips the switch to more bullish than more bearish. We're above the 618, so it's already making me favor this path up here over this path. Like typically, if we were going down, 4504 would have been it, and we would have turned down. Now it's looking more likely we're on this path up here. And that circles back to the chart I started out with. Pull it back up right here. Probably heading up here, long term. And it could be out to, could be out into next year before we get up to that area. Could be February, March. It could be like when Bitcoin halves. We could be getting up in that 40, all-time high area. Then we could pull back, and everybody be like, "Oh my gosh, hair's on fire!" And then we could go on this epic final rally. Now be careful up here, because that can lead to a decade-long correction when we get there. That may not happen until 25, 26. But we're going to turn down, and it's going to be pretty wicked and gnarly and last for years. We're probably not going to beat that high for 15 or 20 years after we get there. Hate to say it, but that's the way that's the way the big patterns are looking right now. So, could be a different path. We'll see. I'll update you as we get there. That's way on down the road, though. That's years down the road. Yeah. All right. Have a great day, everybody. See you again. If you want to, like I said, if you want to come join me in Discord, link is in the description. You just expand the little description below the video there, expand it out. Otherwise, I'll be live again tomorrow. Just hit the subscribe button, right over here where the monster can is. Hit that subscribe button, hit the alert button with the doodads. If I said anything you liked today, hit the thumbs up, share with a friend. That's the way I grow. That's the way I can keep doing this, is if you share with other people. Otherwise,